Hello, good afternoon. You're watching Market Fatafat on ET now, and the markets, nothing exciting that is happening on the D Street, continuing to fall for the sixth consecutive day. Nifty down 1.4%, 18,800 levels, 850 levels, 18,850 levels is what it's holding on to as of now, trading at the day's lowest point. What we're seeing, a big drag coming in, Realty, Nifty Realty, that's down and out on trade. We're seeing the Nifty Media, that too is down and out on trade. Let's take a quick look at what the broader markets are doing as well. Underperformance coming in even on the Nifty mid-cap and the small-cap space, and that too has been declining for the sixth consecutive day as well. So that pressure has been building in overall in the market. Nifty small-cap seems like trying to make a bit of a comeback, but from the day's lowest point, but still down 1.4% in trade as well. Individual movers in trade, we do have RBL Bank, Coromandel, REC, which are among the losers as well on the F&O space. But on that note, let's get started with all those individual movers in trade, either on the back of news flows or on the back of technicals. And on the technicals, we have Amar Singh joining in with us, while from the research team, we have Ankita as well as Ashesha joining in with us as well. Very good afternoon to all of you all. But let me start with the first stock, Industar. That's a stock that is in focus as well. When you look at it, the company actually reported a weak set of numbers in Q2 FY24. Revenue is up by only 1% at 7,133 crores. EBITDA is down by 2% approximately on and when you compare the margins of the company, that's down by around 120 basis points. 48% is what the EBITDA margin is at versus 49.2% previously. Now overall, the tenancy ratio, that's at around 1.74 times versus 1.77 times, and the factors that are impacting it, the company in terms of the move or the results this time, is the bad debt provisioning that stood at 133 crores. As well as in terms of which was much below the expectations. Receivables has increased by about 2,100 crores, which implies that the collection was quite weak in the first half of FY24. Capex stood high at 2,300 crores, continues to be around those levels. With this, there's along with the rise in receivables, so means that there's a negative free cash flow as well. Dividend announcement was unlikely even in FY24, keeping the pressure continued on Industars. Today, Industars is down 2.5% as of now. Let's move on to stock number 2 then, and Ashesha, Nestle is the stock that you're going to talk to us about. They did have some con call highlights yesterday. So what are the key highlights coming in on that front? What are brokerages saying?
Well, yes, the stock in fact is sitting with a cut of over 2.5%, and this is on the back of con call that the company conducted yesterday. We have some brokerage notes that have come in. First up, let's talk about Morgan Stanley, which has maintained its underweight stance on the stock with a target price of 18,910. They say they liked CEO's articulation of the large F&B opportunity and Nestle India's growth strategy, but they also say that going ahead, it is their endeavor to grow the company faster or at least maintain the volume growth that was seen in the recent years. Jefferies has also come out with a note where they are maintaining their whole stance on the stock with a target price of 20,600. They say packaged food salience remains low within overall food segment. They like the food segment as a theme, but steep valuations is what is keeping them at bay. So Nestle, on the back of these two brokerage reports and con highlights, is in focus today, 2.5% lower in trade.
Okay, on the back of the key highlights that are coming in from the Nestle con call, let's move on and talk about Jubilant Food that reported its numbers yesterday, Ankita. And we have a lot of brokerage notes as well as con call highlights that have come in for Jubilant Food.
That's correct, Winnie. Jubilant Foodworks came out with its numbers, and if you look at the numbers, firstly, on standalone year-on-year basis, the revenue is up 4.5%, which was in line with the estimates. PAT was down 39%. It was below what we were expecting, and the margins were largely in line, came in at 20.9% versus 24% on a year-on-year basis. But if you look at the con call highlights here, the management says that they continue to pursue order-led growth. The World Cup trend, the Indian match days are usually seeing an uptick in order. The demand is did see the uptick in during Navratris also, and the ideal EBITDA margins for them is somewhere around 150 to 200 basis points higher than the current levels. But they are positive on the LFL growth in terms of in the delivery space, and dining is also seeing some strong trends. And we also did see some brokerage notes coming out. We did see Morgan Stanley that has maintained equal weight on Jubilant Foodworks. They have cut the target price to to 493 rupees per share from 510 rupees. They feel that the Q2 was rather weak quarter for the top line growth, and they were expecting this, and they also feel that the sequential improvement in operating metrics and gross margins were positives, but the overall growth remains slow. And on the back of that, they have maintained an equal weight and cut the target price, and we are seeing that coming on, the movement coming onto the stock as well. It is down, currently down 5% in trade right now.
Absolutely, Ankita. Surely keeping an eye on Jubilant FoodWorks as well. But what will be coming out with its IPO will be NASA Consumers, that is Mamaearth's a parent company. And my colleague Aman actually managed to speak to the management, Varun Alag as well as Ghazal Alag as well, in terms of what we should be expecting for the IPO. Where are they going to be using these funds? Let's go cross and listen in.
From a perspective of the IPO, and it's an IPO where we are raising about 370 crores in primary, and some of our early investors are also selling their early ownership, and which takes the overall size of the IPO close to about 1700 crores. And we have issued and opened the price band today. The price band is at the lower end at 308 rupees, and at the upper end 324 rupees is where the stock is priced at.
All right, and what does that value the company at? Any details?
Yeah, that will value the company at slightly north of 10,000 crores.
Slightly north of 10,000 crore rupees. Now let's talk financials. I'm addressing this question to either of you, so anyone can take it up, because there was that loss of about 151 crore rupees for FY23, and that was largely on account of the rising employee costs as well as some of the other expenses. Given that we have seen your overall costs outpacing your revenue growth, it has affected the overall bottom line. So what's the plan to rein in your costs, and when do you think that you will remain sustainably profitable?
Aman, I would like to clarify one thing, that if you had to look at FY23, and we did a revenue of close to about 1500 crores, which is a growth of 58% over last year. And now in this year, and if you remove one exceptional item of goodwill impairment, which is a non-business related expense but an exceptional item, and if you remove that, we're actually profitable, and our adjusted EBITDA for FY23 is plus 3%, and that in Q1 24 and has gone up to 7% already, and which is to the north of 30 crores just for Q1. And that's something that we want to clarify, that as we are growing, and costs as a percentage are actually coming down, and because of the leverage that we're seeing in the business.
Right, good to know. Costs are coming down due to the leverage in the system. But advertising as an expense, Varun, that remains a big component, close to 35.3%, if I'm not mistaken, of your overall expenditure. Will you be looking at reining in these advertising costs? And, how do you see the overall, expenditure on the cost of material, etc.?
Aman, I think this percentage that you're talking about needs to be looked at as sum of parts. So while we have Mamaearth, which is a large enough brand, the fastest to 1,000 crores, we also have 5 other brands which are currently in investment mode. And in the last 7 years, we've actually built all of these brands together, and this number is actually a sum of building all of them through the advertisement expenses that you're talking about. While Mamaearth continues to get much better, some of these younger brands are currently still in the investment stage.
And even there, if you purely look at numbers, for NASA Consumer, which is a house of brands, and we have seen the average percentage also coming down. And so from 40% 2 years back, it's come down to 35% for the overall business, where, like Ghazal rightly said, 3 years back there used to be only one brand. Now we have 5 more brands in investment mode. And if you just look at the reinvestment rate on those brands as well, right, from our 80% last year, it's already come down to 46% this year, Q1. And so leverage is actually kicking in there as well. And but we are choosing to grow much faster than the market. And
going right back to the valuation, because we discussed this in the past and there had been a lot of those concerns and people voicing their opinion regarding the valuation. Do you think that at the current valuation, which you pegged at a little over 10,000 crore rupees, you're leaving room for investors? Is it going to be taken down well in your opinion?
It's a process that we've also gone through, where we have met over 100 investors along with our bankers, right? Basis which this number gets arrived at. It's also a number which not only captures where the company is today, right, but captures where the company potentially can be in future. And it's a fast growing company, right, which is still not at a steady state margin profile. And over years, the margin profile will continue to change and improve. And hence, if you look at it from a EV to revenue and EV to gross margin perspective, which is a better ratio to look at it from, and I think we are fairly attractively valued at this point.
To talk about the gross margins in the range of about 70%. So do you think that these levels look sustainable in the long term?
Yeah, so Ivan, these are the gross margins that we operate at, and this is what we will continue to operate at in future as well.
Okay, that was Mama's management for y'all. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back and continuing with all the stocks that are buzzing in trade. Welcome back. You're watching Market Fatafat right here on ET now. A lot of numbers pouring in. Right now you have Asian Paints, and before we go to Asian Paints, let's actually take stock of what happened in ACC in the quarter gone by. Ashesha, ACC also just came out with its numbers, and how were the numbers?
Well, yes, no major negatives over here. Largely in line set of numbers. Revenues have come in at about 4,435 crores. On a sequential basis, it is a drop of about 15%. But this is because of lower realizations. Remember, prices in the southern region were weak and cement prices were hiked in the month of September. So, major part of the benefit will flow in the next quarter. And hence, realizations were weak on the quarter gone by, because of which revenues on a sequential basis have fallen. As far as margins are concerned, they've come in tad below what the street was working with. We were working with a figure of 13%, and EBITDA margins for the quarter gone by have come in at 12.4%. On a sequential basis, again, margins have contracted, and that is because major benefit of fuel price decline wasn't reflected in the numbers. Largely, no major negatives, no major surprises over here. Margins have contracted a tad bit below what the street was working with, but profit after tax figure is much better. The stock, of course, is not reacting, largely flat as we speak.
Okay, surely that is ACC, but like Cheryl was mentioning as well, we did have Asian Paints that came out with its numbers as well. When you look at the numbers, what we're seeing is coming in, EBITDA is below, profits are in line, revenue is below what we were expecting at ET now. Revenue only saw a mild growth of 0.2%. That's why we're seeing that fall coming in the stock price as well. When you look at it in terms of the volume growth, that's come in at 6% for the company as well. Versus what we were expecting also seems like a slight bit of a miss in terms of volume growth. 8 to 9% is what we were expecting the volume growth for the company. So volume growth also has come in below the estimates. Now, in terms of when I'm reading the press release as well, they are highlighting that they have seen soft demand in home decor. Though they continue to see strength of their foray in new collections, but home decor as a segment has seen a bit of a decline on that front. Other than that, the company said that the international business saw robust growth, that is Middle East, overall constrained by macroeconomic challenges, which was in South Africa and Egypt. So that's the front we're watching out for as well. Industrial business, they've continued to see strong revenue growth there. Coating business saw 1.1% growth. 6% volume growth is what we take care of in terms of the decorative business of the company. That's the highlight that we've been getting from the management, keeping an eye out on that. They said that in the commentary that looking towards the second half of the year, they remain quite optimistic in terms of improved demand conditions is the highlight they're giving for outlook. Mainly that is going to be supported by the festive season that has moved forward to Q3. So that is one factor that should be counted as well. But as of now, seems like a weak set of numbers was reported by Asian Paints, and that is why we're seeing the stock saw a bit of a decline coming in the trade as well, down 2.9% even as of now, Cheryl. So miss coming in for Asian Paints when you look at it.
All right, that's a miss coming in for Asian Paints. As you can see on the screen, the stock also reacting to those numbers. But BSC, Amar, this one is charting its own territory, own course. Even today, you have this one in focus. How is this one looking on the charts now? Do you think that the ride that it has been seeing all this while will continue?
Yeah, I would say that BSC has had a spectacular rally. It's one of those stocks which within a year has traded from almost 400 levels to currently trading around 1800 levels. And it has been very strong on the technically on the charts. And even recently, we see that volumes have been significantly higher, but at the current level, some of the indicators are pointing towards overheated market, but the trend is very strong on the long-term charts as well as the intermediate-term trend, because we are seeing that despite the market correction, there are a few stocks which have really managed to hold their ground very firmly, and has been on the upside. So this is one stock one can definitely look at. Ideally, a very strong support base for the stock is somewhere around the 1600-1650 zone. On the upside, the stock has the potential to rally towards the 1900-1950 zone in the short.
Okay, Amar, do stay on with us, but we're joined by Priyam Tolia, Senior Research Analyst at Axis Securities as well. Priyam, very good afternoon to you, and just let's look at Asian Paints numbers, right? At least with the ET Now poll, seems like a miss came in, especially that volume growth was below what we were expecting. It's come in at 6% for the decorator business. So first cut for Asian Paints, how are the numbers looking to you?
Yeah, definitely the numbers are weak in terms of top line and the bottom line as well, because it's below our estimates. We anticipated the revenue growth of 3%, led by 5% volume growth. However, the volume growth is better than our estimate by 6%, which the company reported of 6%. So we believe that the delay in the monsoon, the delay in the festive season, which shifted towards the second half of the year, has impacted the overall demand. So yeah, the numbers are weak.
Okay, numbers are weak, but anything in terms of specific segment-wise also that you could talk to us, Priyam, because surely industrial segment they're saying is still managed to see good growth. So is that something that we could be sustaining, or what is that understanding we could get in terms of that segment as well specifically?
Yeah, the company has been reporting a good set of numbers on the industrial side since last few quarters. However, the core business, which is decorative business, has been a little sluggish, right? In last 2 quarters, what we are seeing. So yeah, definitely the volume growth is coming up, but we'll see how the second half goes for the company and the industry as well.
Priyam, and just in terms of outlook, given that the trend that we have seen from Asian Paints, is that something we could expect to see continuing for the other paint companies as well? Discretionary spend seems like they're a bit under pressure because festive season also has postponed to Q3. So is that an impact that we could expect for other companies as well?
Yeah, definitely. We could see an impact on a similar lines, at least for Q2 results. But we believe that the Q3 onwards, the demand should pick up for the paint segment. So anyways, it was expected that the Q2 would be much sluggish, but this is more than what we anticipated.
You anticipated. So yes, that's the word coming in from Priyam as well. So clearly, Cheryl, a bit of a subduedness that we are seeing coming in on the discretionary side. And that is what even the street was expecting, but it's worse than what the street was expecting. That's the highlight coming in from Priyam. Thank you so much, Priyam, for joining in with us this afternoon on ET Now and giving us an understanding in terms of obviously what to expect in terms of other paint companies as well as Asian Paints. A thumbs down coming in on that front. But let's move on, and Amar, coming back to you, Karur Vysya Bank, talk to us about the charts for this one. Where do you see this headed from here on?
This is one stock amongst the banking space. We've seen some correction in some of the private sector as well as the public sector banks, but this is one bank where we see that there hasn't been any sharp correction. And on the other hand, the stock has been consolidating with a positive bias. And that's what we are seeing technically on the charts. So if I look at the long-term charts, the monthly charts and the weekly charts, they clearly tell me that there is a very strong trend even on the quarterly chart. So that tells me that any pullback in this stock is a buying opportunity. Currently, the stock, if we go back and see almost a couple of months back, so the stock was unable to breach the 125, 130 strong resistance zone. So the stock has breached above that level, currently trading around 144 odd levels. So this is one stock one can definitely look at on holding, and if one wants to add, the stop loss needs to be below 130 levels. On the upside, once the stock starts sustaining over the 148, 150 levels, the stock has the potential to rally towards the 165, 170 levels in the short term.
All right, so that's the take coming in on Karun Vysya Bank, another bank reporting its numbers as Indian Bank. Yes, we're in thick of the earnings season, but when we come back, we will address Indian Bank as well as other stocks that are buzzing in trade. Taking a break right now.